Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for April 22nd, 2013. This week's topic, identifying trend reversals. We'll get to that in just a moment. A reminder for those on the east coast of Canada, we will be in Toronto on May 11th and Montreal on May 12th. Go to stockscores.com/skate to learn more and to register. All right, so let's talk about trend reversals. At this time of year, as we go into May when trends tend to change, there's an obvious concern that the upward trend in the US markets is about to end. So how do you see the signs that a trend reversal is underway? Well, upward trends in markets rarely reverse suddenly. It can happen in stocks, but in the overall market, it is usually after some warning. What you want to watch for is first a break of the upward trend line and then a breakdown from a falling top. Now let me show you a couple of examples of how this has worked in the past. The first chart is of the S&P 500 and it is as of today, but what I want you to take notice of is the trend line break that occurred in October, which was from a falling top, and that led to the decline in the market through October and into November. Now right now the market is at a new high and we have not yet made that falling top. Let's also jump over to a chart of the oil commodity, and here we can see the upward trend line broken in February, followed by a slightly falling top, and that led to the decline in oil that lasted into March. Even more recently, the decline of the last couple of weeks came after the upward trend line was broken early in April, and then a breakdown from a falling top. This is typically how we see markets reverse their upward trend, and so you tend to get some pretty good warning that this is underway. Looking at a chart of gold, you would see that there was a number of falling tops before the sharp decline in gold that happened over the last couple of weeks. All right, so let's do our analysis for the overall markets. Here's a chart of the S&P 500, and you can see that it remains in an upward sloping channel despite the weakness of last week. What is critical now is whether the rally that started on Friday and continued into today will result in the formation of a falling top or the creation of a new high. We have to watch that closely, and then of course watch for that green upward trend line to be broken. Chart of the XIU shows a series of falling tops and a break of the upward trend line, and that is why I have gone bearish on the Canadian stock market. Now in the very short term, it is at some horizontal area of support and a little bit oversold. We have fallen down below that red trend line that I've drawn on the chart. And that means in the short term, there's a good chance it will bounce back before rolling over, but I suggest a lot of caution with the Canadian stock market. The TLT is the ETF for US Treasury bonds, and it has broken its downward trend line. We've talked about that over the last couple of weeks. That shows that there is some flight to safety. This may not be a flight to safety away from US stocks, but rather a flight to safety from other global stock markets. The US is perceived to be the safest market right now. We've seen that in the strength in the US dollar and in the strength of the US stock market. And so I believe that this is a sign that money continues to flow into American-backed assets, but it could also be that money is starting to hide from a breakdown in the US stock market. Here's a chart of gold. You can see the breakthrough support in gold, the break from a series of falling tops. Right now, gold is heavily oversold and likely to bounce back in the short term. So in the very short term, I am actually optimistic about gold, but in the long term, I remain bearish, and that puts me at a neutral rating overall. Oil is at support and bouncing. It is still in that long-term trading range. We've got pretty good support there at the green line, but the tops are falling on oil, and so that means we should be cautious. I do expect we'll see a little bit of a bounce back here that should help the TSX bounce back as well, but ultimately there is pessimism building in the oil market. And finally, the VIX is the fear index. There's not a lot of fear. There was a little bit of a pickup in fear in the last week or so, but we have not broken the downward trend line yet. And what it is important to note, however, is that the tops are falling faster than the bottoms, and that is a sign that the sellers in the VIX are starting to lose their enthusiasm, and we could see the VIX come up here. I think that would coincide with a breakdown from a falling top in the US stock market. This is an important chart to watch, but as it is right now, there's still no strong signal that we should be cautious about US stocks. So I remain bullish on the US stock market, neutral on the Canadian gold and oil markets, and while I remain long-term bearish on commodities and the TSX, they are each likely to bounce back from oversold conditions in the short term. The sellers have not yet taken control from the buyers in US equities, although they are trying to do that, and therefore it is appropriate to be cautious. Well, that has been the Stockscores Market Minutes for April 22nd, 2013. Have a great week in the market and trade well.